Welcome back everybody, your typical bull here, and today I'm going to be explaining one of my very favorite setups that I use for trading cryptocurrencies. But before we get into it, please remember to like, subscribe, and comment. Your support is very much appreciated and helps the channel to grow. Alright, so first we're going to need to set up our charts. We are currently looking at a daily chart of Ethereum. So there's a couple of indicators that I use for this strategy. So what you want to do here is click on your indicators tab. This may be different for your broker. What I use is the exponential moving averages. So inputs, I use the 9-day, the 21-day, the 50, and the 200 EMAs. We're just going to click that, and then I'll change the colors. So I like to use this blue color for my 9-day. I like red for my 21. I like green for my 50. And I like gold for my 200. So there we have it. There's all of our EMAs together. And now what we're going to want to do is we're going to want to add the MACD. As soon as I find the MACD, there it is. We're going to leave that standard 12, 26, and 9. We're going to add the RSI, standard 14-day RSI. And we're going to add the stochastic. And I like to use the 5, the 3, and the 3 stochastic. Blink. So there we have that. Now I'm just going to make these smaller just a bit so my chart's bigger. If I could click it, come on, there we go. Perfect. So now I have my MACD, I have my RSI. Let's make the RSI just a touch bigger. And I have my stochastic here. Okay. So we've discussed our support and resistance zones in a different chart, or a different video, and if you missed that, go back and check that out. It's the same for crypto and stocks, but how we draw these is we're going to use this little rectangle tool here, and we're looking for areas that price bounces or rejects several times. So here on our 4-hour chart is where we're going to want to start. So we're just going to draw these zones. There's one. And I'm going to color that support zone green. And then here, that's another one, which is currently functioning as support. So we'll color that one green as well. And this looks like a more recent one here. Price is rejected there twice. And we're going to color that one red. So now that we've done our 4 hours, we can scroll down to our 1 hours and see if we notice any other areas. See that zone? We can adjust it a bit now to get more current price action in. Perfect. So now we have our zones adjusted to current price action. And if you want to, you can mark some of these less prominent zones with just a horizontal line. I do sometimes. Alright, so there we have our current. Let's adjust this one just a bit. That looks pretty good actually. Okay, so now what we are looking for in this specific strategy is rejections from support and resistance levels. Right? Why is my pen not working? Let me reload this real quick so that I can actually draw on this chart. For some reason it's not working. So there we go, now it's drawing. So what we're looking for is a stock, or I'm sorry, is Ethereum or Bitcoin trading in between two of these zones, like so. This here is your resistance. And then this bottom level is your support. So the idea is once price moves to this zone, you short it with stops just on the outside and targets at least 2 times away. And then when it moves back down into this zone and rejects the other direction, you go long with stops below the zone and then targets at least 2 times away. And we'll go over a bunch of examples. Alright, so first example here on our chart. Here you see price breaks down, but you don't quite get, you can't really trade this pattern unless, actually, you can trade that pattern. And the reason for that is that here on our 4-hour chart, we marked that zone as a major. Oh wow, my Weeble just crashed. Let me just get back to where I'm going here. Okay, sorry about that. Oh wow, everything changed. Let me just reset these charts up real quick. That sucks. Alright, let me just reset everything up real quick so you guys get a double demonstration here. 50 and 200. Style 921, 5200. Blue. Make this one red. This one green. And then we'll make this one gold. Sorry, that's unfortunate. So there's our EMAs. MACD and RSI is already on the chart, so let's put our stochastic back. Style 533, done. Oops. Okay. Stochastic 533, back. Alright, now let me just resize this one more time. Hopefully that won't happen again. Perfect. Alright, so these are the zones that are pretty well the same. And anyway, we noticed back here on our 4-hour chart that this was a very major price level prior to this huge dip. So we can actually trade this on our 1-hour chart. And where's that dip? So back to the pen. What we're looking for is for price to move into and reject out of these zones like it does here. Here, here's a rejection, here's a rejection. Right? So those are very obvious rejections. Let me just get this out of the way here and we'll delete this one just so it's a little more clear. So as price moves down into this zone, and then you start noticing those rejections out. So what you want to check is this MACD first. You notice that you are starting to show some bullish momentum. The MACD is still going to be bearish, that's fine. You notice that your RSI is down and starting to hook up. And you notice that your stochastic is also making an uptrend. So check, check, and check. Now, all three of these things don't have to be in a line, but usually the best trades happen when they do, as well as your bullish candlestick reversal patterns. And if you don't know those either, you can look back and check those out. All right, so, and you can even go as far as trading this on a 30-minute chart or a 15-minute chart even, but you're going to get So on a 30-minute chart, you notice here, it's pretty well the exact same. I personally like to stick to the 1 hour chart myself. Right? Okay. So as price moves down into this zone, you don't want to buy it as soon as it touches it. You want to wait for it to start making some bullish rejections like this candle here. And then once you notice those bullish rejections, you can get in hopefully just on the outside. And then your stop loss goes below that pattern. And this level here, this is your 1 times risk. Now for your targets, there are 2 ways to go about doing this. What you want to do is get 2 times this, so roughly here. You want to get 2 times risk. Or what you can do is take off 50% of your position at this 2 times risk and then target the very top of the zone with your other 50%. Which is another thing that I do in very strong trending markets. So basically what that would look like is your original stop is down here, your entry's here, and then your target's 2 times away. And then as you move up and touch this target, then you just move this stop loss here to probably, just a little bit away from that target there, and then as it continues to move up, you just trail that stop all the way up until it's finally hit. And then once you reach up into this part of the zone here, you're looking for shorts now because you're at a resistance level. And if you notice, you start getting some bearish rejections here. See, here's the move in, then a bearish rejection there. And you're looking to short at this area. So what you're looking for here is the MACD moving in a bearish direction, and you don't get that here. And if you notice, this price movement doesn't come all the way down, and that's probably the reason for that. But you do notice that your RSI is sloping down, so there's 2 out of 3. Your stochastic's also sloping down, so I would take this trade simply because you have 2 out of the 3 signals working in your favor. So your entry is here, your stop loss is above this candle, and take profits roughly 2 times away and at 1 times your risk. So if your 1 times risk is this, when the price moves 1 times away from that here, you move this stop loss to your break even. So there are 3 outcomes to any trade. The first outcome is you win. Second time is that you lose. So you win 2 times your risk. You lose 1 times your risk, or you break even. So those are the 3 outcomes for this strategy. Right, let's go over some more examples, and then we can go ahead and look at some 30-minute charts as well. Alright, so here's a very good example. When you notice, you want to see very clear rejections. This is a very clear rejection. This is a very clear rejection. You notice price coming in here, and then it's kind of just meandering and consolidating and doing that nonsense. You could argue that this is a clear rejection, but it's meandering after that. You don't want to take, you could argue that this is, and you would lose that trade, which is fine. You lose 1 trade, but you don't want to trade all of this when it's just sitting here trading sideways. Correct? Okay. So here, this is a very, very clear rejection. You notice the price is moving down into this zone here. Price is in the zone, and then you get a very bullish pin bar off of that zone. And then price starts to move and break back out here. So you could put a buy order in just on top of that bullish pin bar. and a stop loss just below that pin bar. You'll notice your MACD's crossing up, your RSI showing some bullish movement, stochastic showing bullish movement. So check, check, check. And another thing I like to look at is that I can get to at least 1 times risk before I hit this 50 EMA or this 200 EMA. So that's also a check. 1 times risk, that's another check mark. So all of these things don't have to be in a line, but the more things that are in a line, the higher probability your trade's going to be. So there's your entry, there's your stop, and then 2 times that is roughly here. And you can see that is hit. And if you took off 50% of your position, that would very likely be hit as well. You'd probably end up getting out right here around the 200. Because if you remember from our past lessons, this 200-day EMA does function as a resistance level very often. So you want to pay attention to things like that. And it does eventually hit that zone. And as you're drawing these zones, know that more recent levels generally have a higher function in cryptocurrencies than they would with stocks. So like here, you notice this is a very strong pivot. Price moves here, 1, 2, and it's retesting and breaking, and it's bouncing and rejecting off of this same level several times. So that's a level that you very likely would mark on your chart. That's important. And if you notice, price moves all the way back down here, and then when it comes back up, it starts to reject off of that again. So this is a zone that I would eventually mark, even if I didn't mark it at first. So this level here, you notice how many times it does function as support or resistance. You definitely want to be marking stuff like that. And then because your zones may be shifting, so if you notice, you could trade this on a very short time frame when it gets to this point again. See, this is definitely a bullish candlestick reversal pattern. It's a inside bar candle. There's a bearish candle followed by the inside bar, and then this candle closes above that. That is a good trade. Your MACD is making bullish movement, your RSI is moving up, your stochastic's moving up. You could get to 2 times before you get to that zone, which would be roughly here. So there's your targets. So you just have, this is a very dynamic thing. It changes on a regular basis. And then once again, once you come back up to this major price level, price rejects, stop losses, entries, and then your targets are roughly right here around this pivot, and you do hit that. So there you go. Let's go look at some more examples. Let's go look at the Bitcoin chart. I should already have some things drawn on it, and I do. I'm going to keep this channel on here because I'm using it for other things. So when I trade cryptocurrencies, I only trade Bitcoin and Ethereum, and every now and again I'll trade another of the momentum coins. I'm just going to go through here and mark some setups just for added examples while I talk, but I only trade Bitcoin and Ethereum because they offer plenty of signals. But every now and again, like when there was major hype around the Dogecoin or things like that, I did trade that, but I try and steer away from all the crap coins. Here's a good setup. Bullish pin bar off the zone. Entries, stops. MACD's making bullish reversals. RSI's making bullish movement. Targets 2 times away. Boom, hit. So anyway, I feel like this is probably gotten the point across. You can trade this strategy with stocks. You can trade this strategy with crypto. It works on really anything. It's just very simple, but it's a very, very powerful strategy, and it's one of my favorites, if you notice. All right. So please remember to like, subscribe, and comment. Thank you guys, and I'll see everybody in the next video.